So, hello everyone. Good evening and welcome to all in this silver membership group. And today we are going to cover Fibonacci retracement as part of the concept part 2 session. Yesterday we have covered moving average. So, before moving further, if anybody has any question on the moving average, feel free to ask. Otherwise, we'll start with Fibonacci retracement. Okay, fair enough. So let me jump onto the Fibonacci retracement. Okay, here you go. So the history of Fibonacci retracement and why we use this concept. So before using this concept, let us understand a few facts. So what's happens that in the stock market, when a stock price is going up or down, the movement in any direction, it is upward or downward, it doesn't happen in a straight direction. Okay, no matter stock is a uptrend or downtrend, whatever the movement is going to happen, it will not happen in a straight direction. There might be some exceptional stock that may go straight up, but again, it will be a very rare scenario. So what's happened in an uptrending market? Okay, I'm just giving a first example of uptrending market. So when a stock price moves a certain price level up, so the bull means who are the market forces who are taking the price up, they after some time they get tired. Okay, and in that situation, the upward movement, it takes some rest. Okay, and that is the time period where the price falls back a while, not completely, but in a bull market, when the bull gets tired, okay, and that there will be a slight fall will happen, it will be a slight to moderate. Okay, and that situation, when that situation happen and when stock start falling, there will be a certain level where the falling stock will find some support. Okay, and the same thing is also applicable in falling stock. So suppose the main trend is downtrend. In that situation, after moving a downward direction for some amount of time, it will find a support, and then the price will bounce back little upward direction. Okay, so in both the ways, either stock is going to go up. In that case, it will find some resistance and it will take some rest, and the stock will fall fell little bit down. And in a downtrend direction, when the price is going down, it will find some support, and again it will bounce it back at a certain level. How that will happen, we will look into the example in subsequent slide and also in the real time chart as well. Okay, so and that, okay, that is the one saying that, okay, there is no greater fool to pay at the higher price. In fact, some bulls turns bears. So what it means that even in a upward direction, so when the price keep on moving in a one direction, after a certain point of time, there won't be any people left who are going to purchase that particular stock in at that price point. Okay, so that means the price has been raised enough. So that is and the reason that, okay, there is no one willing to pay a price. So for example, any stock of 100 rupees, and it is keep on going upward direction in a very short period of time, and it reached to the 200 point. Okay, so that means 100% price movement happen in upward direction. At that point of time, okay, there will be no anybody left in the market who is willing to pay that much price for that particular stock, and that is the reason where the price will take some resistance and it will move a little downward direction. Okay, next, point related to the Fibonacci retracement is that so it is how it is displayed. So it will be we will show the example, see the example, but it will be some, certain horizontal lines based on some Fibonacci number. And Fibonacci number, we know that it is 1, 3, 5, 8, 13, and so on and so forth. In either scenario, you don't need to remember that. There is already a tool available called Fibonacci retracement tool, and we are going to use that tool. Okay, and their retracement levels are also associated with some percentage, and those percentage are represented in this format: 23, 38, 50, so on and so forth. And again, we don't need to remember these numbers. It will automatically generate via the tool when we will look into the chart. So, okay. So what the concept that we are discussing, just now we discussed, let us see in an example chart. So this is the example of ICICI Bank. And if you look at this point of time, this is the one of the low level from where the price started moving up very rapidly. Okay. So from this level, maybe it is around 630 or so. There, the straight movement, this stock price took a straight movement upward direction. It reaches around 900 or something, and after that, it is start falling for a while. So from the higher level from where the stock price is, it started falling. This is this point where my mouse is there, and after that it fall a certain level, and from this point of time it again took some support and moved further up. So from where it is taking a support, okay, that is called retracement level. Okay, so that means in a upward, while the price is moving in upward direction, and in between whatever the level it will fall, it is going to fall back, or it is falling back, that level is called a retracement level. Let us look into the some real life example. So rather than okay, this is the example of ICICI Bank. Maybe I'll show you in the live chart directly. So let me open the investing.com and ICICI Bank. Okay, so yeah, so this was the example which I was showing some time back. So look at this chart from this area, from here to here. Okay, so overall the price movement is happening in upward direction. At the same time, if we look at just only this particular chart area, so while the price is moving up, it has fall back for a till certain level. Okay, and and that is called the retracement level. From here, it find a support, and if you look here in a traditional way, also you will see if you put a support line in this chart, maybe horizontal support line somewhere using maybe maximum point. So that is also somewhere touching the similar line. But without putting the support line or support line in the chart, this is the another tool which gives you a conviction that in an upward direction, if a stock is falling down, how much it is going to take a rest, or how much it is going to take a retracement. So without any support, putting a support, we are going to use this tool. So to find out that retracement tool, you just look into the third option from the top. So within the third option, the toolbar option, you will find a fib retracement. So here is the fib retracement tool. Okay, this one you need to select. Once you select this one, the tool is selected. Now look very carefully how to plot that retracement. So what you need to do in a upward direction when the price is moving. So you need to see what is the top level, okay, that is stock price moves. So as of now, this is one top level, and there is this top level. But we need to see the first retracement where it is, the price is coming down. So from journey from this down, this place to this one, in between, this one is this is the point, or this is the area where first time retracement is happening. So you need to do the first click at the top level of this price point. So I'm clicking here, doing my first click. Okay. And the next click I will do till the time or till the price point it fell down. Okay. So I'm just clicking at I can click here also. So my fib retracement has been plotted. Okay. So, so because of some temporary issue in investing.com, this tool is not working properly. Why I'm saying not working properly is because it is just giving only one value. Okay. So as a backup, maybe I can use the chart from Zerodha. So Zerodha is my trading account, and in Zerodha also you can use the chart. As I mentioned earlier, in your trading account also there is a option to to find out the chart to do the analysis. So here I will go and I will say ICIC Bank. ICIC Bank. Yes. Okay. Yes. So maybe I'll first delete it here, and then I'll try to find out the same. Yeah. So this was I have done it manually. So here is the lowest level. This is the uh, and the example from where the price is falling down. So either I can take it. There are two examples I can show you here. One is this low. If I take the highest point, this high, or I will take the example from in between as well. So let us see the middle example. So here is you can find this is a similar toolbar options are there. So you need to select from the third one and select the option fib retracement. And the first click in this example, if we need to see the, okay, how much retracement is happening in this case. So the first click on this level where your price point went till this point, and second one is the price point till it fell down. And that is how your fib retracement toolbar will be placed on the chart. And if I will just maximize it just to have a better view of the parameter which is displayed. So if you look it clearly, I will just zoom in for you. So this is the zero level, that is the starting point of the this fib retracement. And if you look at this is it is showing the some decimal number, 0.23, 0.38, 0.5, 0.61, 0.78. So these are the numbers in fraction. But if the same point, if you convert it in percentage, so it will be 0% here starting point. Maybe little bit improvisation is needed. Yes. And then 23.236 means 23.6. So if we are presenting, we need to present these decimal number into the percentage, we need to multiply by 100. So that is how the retracement is getting calculated. Okay. So, right. So okay. So here, I think while plotting this graph, whatever I have displayed here, this way is applicable when the price is moving in the downward direction. For when price is moving upward direction, we need to keep this fib retracement in a reverse direction. So I'll just select one more time. Okay. So when I select fib retracement once here, so when price is moving up, my let me just see once again, not this. I need to keep it in a this way. 1 second. There is some technical issue in this today. Okay, so maybe I'll just try explaining from the chart itself, or maybe I'll just try one more time. Let me see. Okay, no. So actually, to calculate the retracement, we need to start from the lowest point and reach till the highest point. Okay, so that is, yeah, this is the right way it is working. Yeah, correct. So to calculate the correct retracement, we need to start the first point at the bottom. I'll just put it once again for you. I will select the retracement tool from here and select the fib retracement tool. The first click I will do from where the price started moving up, that is this price point. And my next click will be the price point it went up, and from where it has falling down. So I will do my second click at that level, and then this fib retracement tool will be placed. Okay, so as I was explaining earlier, so from top to bottom you can see there are various fraction numbers like 0.236, 382, 0.5, and so on so forth. So these fraction number, if you convert it to the percentage, it will be 23.6, 38.2, 50, 61%, 78%, and so on. So in this example, when the stock, ICICI stock was moving up, so the retracement is happening. It has not even touched 23. So it has retraced around 20. And again, from there, it moved upward. Okay. If we need to take the another example of a retracement in the same chart, so we can consider, I'm selecting here. Okay. So please look carefully. I'm going to the third option and selecting the tool called fib retracement. Okay. And I'm doing my first click at the bottom, and this time I'm going to the topmost point of this uptrending stock and doing the second click here. Okay, so in this case, the fib retracement or the retracement of this stock while moving upward direction, it is happening from this level to somewhere at this level. Okay, this is the lowest level in this price point. So suppose the stock is in the live market, okay, and it will be something like this. Okay, we don't know the future because we are testing it into the past market data for our learning purpose. So we need to identify that, okay, what are the various level any retracement can happen. So those different levels are derived based on this Fibonacci numbers. And if you look here in this example, the retracement happened approximately 38%, which is at this level. So basically, this fib retracement gives you a way, a tool to identify that in an uptrending market, when a stock is taking a rest till what price point, or it will fall down. Okay, so it may fall down by 20%, by 38%, or by 50%. Okay, and another way to use this retracement tool is that till this price point, right, till this price point or the percentage, this is the line of 50%. I will just write it for you once for a better understanding. So this level is 50% level. Okay, so it is normally assumed that in an uptrending stock, any price point can retrace or fall back up to 50%, and this is treated as a healthy retracement. Okay. And if any stock is falling beyond 50%, then that means it may be considered as a trend reversal. It is not the retracement. So in the most of the scenario, 23, 38 or maximum 50%, if it is going beyond that, then we need to treat it at a differently, and how to treat it we are going to learn when we apply these concepts in a real market scenario. So as of till this point of time, you just need to understand that fib retracement is used to know the various level of the price point till that till that price point, any uptrending stock can fall back. Okay, let's take the another example of the downtrending market. So this was a example that I just show you, and this is the Fibonacci retracement in a downtrending market. So this snapshot is from NTPC, where at in this example the stock price is falling down. So if you look at, this is on this falling market, this is the highest level from where the stock price started falling down, and then this is the lowest point till this price point it ultimately the fall has happened, and after that there is a bounce back is happening. So this is the price from where this stock is taking a support, and some bounce back is happening at till this level. So the level till which the stock price bounce back in a falling market, it's called the retracement level. Okay, I'm just repeating once again for your understanding. Retracement level in a downtrend market is that level, okay, which that level of price point the stock price bounces back from the its lowest level. How to use this in a real real chart? So let's see the example of NTPC. So let me first bring the NTPC stock or NTPC chart. So I have selected here NTPC and need to find out the same example. Okay, I hope I should be able to find it out. Um, yeah, I'm just searching the same, exactly the same example, just for your benefit. Otherwise, I mean, we can see any other example, that doesn't matter. But if I get the same example, it will be convincing for you. Yeah. So here is the example. So let me delete the previous data and bring this chart for you. This is another fib retracement I have added earlier. Okay. So look at this chart. Okay. So in this case, the price, this is the highest point, and from where the price started falling till this level basically. Okay. And this is from here it found the support, and then the bounce back, that is retracement, is happening. How to use the fib retracement tool in this scenario? That again, go back to the same toolbar, select the fib retracement, and in this case the first point should be from where the stock started falling. This is the first point, and then keep your mouse uh, unclicked and come here till this point. It took us some support. So do the second click at this level. You can do anywhere, and later on you can just hold Sorry, everyone. Looks like there was some technical glitch and it got auto disconnected. I hope everyone can able to hear me now. Can
Yes,
anybody confirm by
yes,
typing
we
it?
can hear.
Or okay, thank you, Hina. So I was just explaining the fib retracement in the downtrending market. So let me just plot this chart fib retracement once again. So the first, I have selected the fib retracement tool from this menu list, and then my first click will be at the price point from where this price of the stock started falling down. I started okay, and the second click will be till the point it fell down, and this is the pointer. Okay, I can select and pull it left and right just to place this fib retracement tool based on my requirement. Okay, so basically I need to drag it in a right, left, or right direction so that I should know that okay, what is the price point it is the retracement is happening. That is the main purpose. Okay, so if you look at the percentages in this example, this is the level the retracement is happening, right? Sorry, this light green level. Okay, and this level, if you look at the this percentage, it is around 38%. I hope it is visible. I'm just zooming in so that you can able to see it properly. So this is 0.382, or if you convert it into the percentage, it is 38.2%. Okay. So, and because it is less than 50%, we can consider as a healthy retracement. So what is the use of that one in the falling market? So suppose you are someone who are a short trader. Basically, you are short trader means you are selling the stock first, or they are selling their futures first and buying it later. That is the short selling you are doing. Okay. So suppose you have done the analysis, you have entered into the market till this point price point, and then maybe you took a short position, you or anybody took a short position, and the stock price fell down till this point of time. So if okay, so if there, and here we don't know, because if you look at the history also, there may be a some resistance point historically, but in case if you're not able to find it out any resistance point, if you can able to find out the resistance point based on the historical data, so you can simply use support or resistance that we learned in session 1 of technical analysis. You can put them in the chart, something like this. Okay, and then it will tell you that okay, this might be a another support point from where you can potentially exit your trade. Okay, and as per this example, yes, in the past also the price that took support at similar level, but suppose we don't have any past data for that particular script or that particular stock. So in this case, you may not able to take your exits at this point. Okay, because we don't know that it will fall further down or not. So in this, in that example, you can use this fib retracement tool. You can plot it by keeping the first point here and second point at the same level. From here, it has started moving a little up. Okay, and then keep an eye that okay, what is the percentage retracement is happening. Okay, so the first one you can wait till maybe this point of time. Okay, so if it has start maybe, so there also you can think of maybe some other situation. You can maybe somebody can think of taking another short position depending on few more convictions, few more indicators, or somebody, if it again crosses back, you can still wait and then do some additional entry here. But suppose you have taken only one lot of trade and you want to identify that, okay, what should be the ideal position to exit. So in that scenario, if it is a bounce back is happening till 23% or 38%, you just keep an eye, even till 50%, because 50% till 50% it is treated as a healthy retracement. That means it is normal or natural that any falling stock can take a bounce back till 50% and further go down. So once you have that knowledge about this retracement, you will not feel nervous in the market. You can wait patiently, and when either it is taking again, resistance from 38%, it will go down, or maybe take resistance at 50% also. But in this example, if you see, it has took a resistance somewhere nearly 38%. There is some breakout, that is a false breakout basically happened. So what is the false breakout? I mean, we breakout, we will understand later as well. But at this point of time, we understand that this is the 38% line, the green one. But if you look at this area, okay, so there were multiple instances where that is stock price tried going up, one, two, three, okay, maybe four. So four times this stock tried breaking the virtual resistance. I mean, considering only this example, but it did not succeed. Ultimately, this line acted as a strong resistance, and price again started falling back from this point of time once again. Okay, so it fell down till this level. Okay, and then, I mean, if we have already plotted this retracement one, maybe one could have waited, or maybe ideally one should wait till 50% as a confirmation. And if it is going beyond 50% up, then maybe you can take a final decision that, okay, yes, maybe you can think about taking exits. Otherwise, just be in the market and then wait for some more time until here later on. Again, you may apply your other learning of support and resistance by looking into the historical data, or based on other learning also we can take out our decision. So if you look at this bottom, this area, okay, can anybody unmute yourself and tell that, okay, what you can see in this highlighted one? So in the second session, we have learned about some candlestick pattern. Can anybody see some interesting candlestick pattern in this one? So there are, I can say, bullish candle is also there. Some other candle like a hammer type of candle is there, and there is one more candle. Maybe it is more of the neutral. The doji candle is there. So what here I'm just trying to say is, in a second session we learned about some bullish and bearish candlestick patterns, and here maybe the red candle, it is looking more like a hammer. Okay, a small body. Let me just zoom in. Okay, so there's a small, as compared to the overall length of the candle, so body is small, and this lower wick is kind of a 2 times larger than this body, and that is what we learned about characteristics of a bullish candle, and that is the hammer. So hammer, when found at the bottom of the trend, is treated as a strong bullish or the potential reversal sign. Okay, so based on that also, if you or somebody could have taken the short entry here, you or someone may think about exiting the market from here based on that candlestick learnings. The other way to exit here may be based on the fib retracement also. So if we apply fib retracement maybe from this point to this lowest point, let me plot the chart, not the chart, maybe this fib retracement tool. Okay, so this is how it looks like. Let me remove it. So this is the price point where it took support and started moving up. And suppose you are not sure and you are still want to apply your Fibonacci retracement learning to take your decision. Okay. So in that case, what you can do, you can plot your fib tool. Okay. I'm just going to show it once again, how to plot it. We select this tool, go to this toolbar, select the fib retracement, click your first click at the top here, second click at the bottom from where the price is starting moving up. And suppose you are somewhere here. And what we have learned just now, that fib retracement can happen up to this various levels. So suppose you have waited till 23%, it still started moving up, and you might think that, okay, yes, I was told that 50% is the healthy one. Then you have waited maybe one more level, it reaches 38 level. And after it crossed 38 level also and reaches till 50%. And this is the maximum limit that we can afford this trade to be in. So what we need to do at this point of time, so once we see that, okay, it has about to cross the 50% of the level that we learned during the level 1 of stock market or technical analysis, then you can safely decide to take the exit from the market. That means it is retracement is happening more than 50% and there is no point. This is the final signal for you to take your decision. Okay. So these are the small points, but very, very effective when we learn. And along with this fib retracement, we are going to learn few more concepts that will give you more edge to take a better call. Okay, so hope you understood about this the various level of retracement, and based on this fib retracement, how to take, maybe primarily it is a exit, not this fib retracement is not useful for the entry. It is basically useful for taking the exit. Anybody have any question, feel free to unmute yourself and feel free to ask. Any question from anyone on fib retracement? Okay, no worries. Let us see if there is any more example that. Yeah, so this is the same example I was talking about that I have already explained to you, that if there is any retracement is happening which is less than 50%, then it will be treated as healthy retracement or normal. Okay. And again, depending on your additional analysis on the chart, and which for more analysis of the concept we are going to learn, you can take a call. Okay. To be there in the market or not. But as far as this Fibonacci retracement is concerned, so any retracement which is happening from 20, I mean any percent, because from this point of till this point it is 23%. So from any retracement till, I can say 5% to 50% is treated as a healthy, in a most scenario, what I will recommend is that you don't wait any further after this 38, sorry, after this 50%. You can wait till 50%, and then if it is going beyond retracing beyond that, you can decide your move to get exit from the market. That is the theoretically it is. I mean that is about the all about fib retracement theory, which that recommends you. Okay. So let us take one more last example of fib retracement. Maybe any other stock of your choice you can select. I'll show you. Otherwise, maybe I can show uh, some example. Let us take example of another company called BHEL. Okay. So overall, if you see, there are BHEL again, we can see a mix of trends. So let us see one example of the falling market. Okay. So let's see how much the fib retracement happens. So I'm just clicking the fib retracement tool and the price point. Okay, this is the in this chart which is visible on the screen. This is the highest point. Okay, so I will, and when we are putting using the fib retracement, if it is the down trending stock, the first point will be from where the price is started falling. So this is the high, I mean, this is the low point before this, before any point, left hand side. So this is the lowest point. Okay, from there it is going up, and after this point it is falling down. So this is the highest point. So in a downtrending stock, the first click should be on the top and second click at the bottom. Okay, and you can click it here, but ultimately we need to identify how much bounce back is happening, how much percentage of bounce back is happening. So you can just click once again on this corner and drag it into to the right hand side, so that the bounce back point is kind of covered via your fib retracement tool, so that we should able to clearly identify how much percentage of retracement is happening and that retracement is healthy or not. So as I mentioned earlier, in a downtrending stock, there is a opportunity of short selling. So that means if you have identified, maybe based on your learning, that learning could be the SMA and EMA, which we learned yesterday. And you have identified that, okay, yes, from here the crossover are, happening. So let us just apply the crossover also, which we have learned yesterday. So let me use the indicator and use EMAs. 1, 2, 3. And what are the EMAs that we learned started to apply? It is start with EMA 5, and style is okay. Let it be maybe light green, and then sorry, I think I've chosen the wrong one. It should be 1 second. Yeah, EMA we have added here. So EMA 5 and then EMA I think 13, and then EMA 26. Okay. So based on, see, so now we are directly applying whatever we have learned in last 3 sessions, including today. So including today, it will be the 4th session. So we have learned about EMA or SMA. So this one is the top point. So based on that, maybe one can think of taking a short entry. So if you look at this point, let me hide this chart for some time so that you should able to see the indicators. Sorry, volume. Okay, so looks like in okay, option is there. So investing.com, there was just a toggle or icon from by using which you can choose to display or not to display. Otherwise, this is the Zerodha chart where you need to go to the listed stock name, and there you can use the various settings. Okay. So I have decided that okay, not to select chart for some time. And we were trying to understand the entry point. Okay. So based on learning of EMA or SMA, and in this example, we are using EMA. So we need to look for the negative crossover. Okay. So actually, if you see, the crossover is happening at this point of time in this range. Okay. So where the EMA 5 is the light green light. Okay. So this is confusing. Let me change the color so that it will be clear to everyone. So maybe 5-1, I'm choosing the green, and then 13, I will say maybe blue, and then 26, we can keep it maybe red. Okay. Are you there with me? Hope you have not.
Yes.
Okay, great, Hina. Thank you for confirmation. Somebody keep on saying yes or no so that I get a confidence that okay, you are not sleeping. And maybe one more request. So whenever possible, maybe we'll try to be on the on camera so that it will have more maybe a energetic or more communicative session. Okay, it will help you in better learning. So in this at this price point or at this range, there are some negative crossover happening. Negative crossover means the EMA line of lower time frame, that is 5, which is green color in nature, it is crossing downward in downward direction to the EMA line of higher time frame. Higher time frame means 13-1. So here if you look at the 5-1 is the green one, which is first crossing down or doing the uh, crossover down, sorry, negative crossover of the 13 EMA, and then ultimately the 26 EMA. And at the same time, the 13 EMA is crossing down 26 EMA in a downward direction. So based on this EMA concept, one can decide to take a short entry, and then I mean they can exit here also again if based on the EMA. But again, I said when I was teaching you EMA also that okay, these individual concepts are may work very well also, but to have a more convincing, it is always recommended to okay use some more tools and indicators so that I mean you should not able to hit your stop losses. Okay, what is the stop loss? I will tell you, this is the concept during the application we learn and will apply. So as of this point of time, we just understand that we can take an entry exit based on the EMA. And based on the fib retracement, mostly it is used for taking the exit. Okay. So based on that theory, so based on EMA, one can take a short entry here. And for exiting purpose, I mean, they can use the same EMA concept. Okay, but here, because we are learning fifth concept, we need to see how fifth concept is applied in the live market. Okay, so let me bring back the chart, and then candles, hide candles. What is happening? So it is the candles looks like they are hiding from us. They don't want to come. That is why it looks like. candle. Okay, hollow candle, and that's a candle. The volume, and let me remove that. Yeah. So okay, so there is maybe some technical issue in the Zerodha chart as of now. Just understand that we took entry based on the EMA. Okay, and what we are going to do that, just we are going to keep um, the fib retracement tool, maybe by considering this as a chart. I mean, EMA here, we are assuming that EMA lines are the chart. So I will click first point here, and what one at down near. And if there is some adjustment required, you can adjust it. And here you can say, okay, so in this case, the first time it is taking the sub resistance from here, the 23% level, which is beautifully meeting. And after that, its price came down and it started moving up further. So from the retracement point of view, you can expand it, okay, and again wait till it crosses 50% up to that. So either you can exit at 23.38, but maximum wait you should not do more than 50%, okay, and decide taking your position is squaring off. So squaring off is the another term which is used for exiting from the market. So square off means if we have taken a long entry means if we have purchased the stock first, you can sell it whenever the right situation comes. But in this case, we have not yet purchased. Basically, this is the downtrending market. So in this case, you can sell the stock first. Okay. And then when the price moves down, you can purchase it. So whatever the difference, that will be your profit. Okay, and let's take one more simple example. Any other stock can anybody recommend which I can able to show you? Any other stock of your choice? Anyone?
Any pharma you can take?
Yes, please. So which is your favorite pharma stock?
Uh,
Let's take
you can take Cipla, I think.
sorry, Cipla.
You can take Cipla, yeah.
Okay, let's take Cipla NSC. Yes, so this is the Cipla. Okay, the beautiful, the uptrending stock. But the problem is, where are my candle line to find out? Okay. So Zerodha is also showing some error. So sometimes this technical glitches happens, and this is not anybody's fault. This is the Zerodha's technical issue. Okay. Let me refresh it once again. Perfect. And I will select one day. I'll remove this one. Okay, let's take a example of this one. I'll just take the candles little bit visible. So is in this uptrending market. Okay. Let us take just choosing the right place to show the examples very well. Yeah. So in this uptrending market, we need to find out 2 points, the lowest point and the highest point from where the price took some resistance and did some retracement. So I'm selecting fib retracement tool, doing the first click down and the second click on the top till the price point, it went up, and I will click there and then try to find out the, okay, so retracement wise, because it is not moved any further up, so we need to maybe choose any previous point so that we should able to plot the retracement. If you take the last one, then there is no retracement we can able to show. So just to understand the retracement level, we need to select the second top point and then see what percentage of retracement is happening in this case. So if you look at in this case, so price took a resistance at this level, okay, and at that point the stock price of Cipla was that 1150, okay, and this is the level it's the stock retraced, and in this example it is less than 23%. It may be somewhat 20% or so. Okay, so this is the example of fib retracement in an uptrending market, where I'm just repeating once again. So the any price fall or the bounce back, it can happen up to 50%, which is acceptable. Acceptable means that, okay, it is a called healthy retracement. It can happen, no need to worry about. But if it is retracement is happening beyond 50%, then yes, as a trader and as an investor, as per the concept, we need to think of exiting from the market. Hope it is clear, Hina ma'am, on your favorite stock.
Yes.
Okay. So yes, we have I think almost reached the point of time, and we have covered this examples completely. Okay, so if there is any other question from anyone, feel free to ask. Otherwise, I mean, we have done as far as today's topics was concerned. Any other question from anyone?